Change is the only constant. And if you add consistency to that constant, you have a winner in hand. Over the years, the options for investors to choose investment instruments have only multiplied. Let's face it, we are all in the same boat. I mean, from simple fixed income instruments to mutual funds to cryptocurrencies, we are spoiled for choice, and this multiplicity of choice does confuse investors like you and me. Welcome to the MyFund Bazaar Academy. It is lovely to see your smiling faces and have you back on the platform, coming straight to the reason why you have clicked on the thumbnail in the first place. What we have observed over the years is that the price of the asset classes move in cycles. What do you mean, Shruti? Some of you must wonder. Timing the entry in each of the asset classes is an impossible task, they say. But, and a big but, the word impossible doesn't seem to exist in the dictionary of the ICICI AMC, here to reconstruct asset allocation the right way for you viewers and investors. We have the Head Product Development and Strategy ICICI AMC, Mr. Chintan Haria.
Thanks, Shruti, and hello, viewers. Essentially, I think over the last few days, we've all enjoyed the festivities, and obviously, the weather has probably taken a toll on my throat, so apologies for that.
Who had also enlightened us on mutual funds for beginners. We at MyFund Bazaar highly recommend you viewers to have a glimpse of that session as well, where Mr. Haria takes us through the right time to invest in mutual funds. So if I were you, I would probably save that video to watch later. Believe me, you will thank me later, viewers. With that out of the way, heading over to the platform to ICICI team to show us the roadmap to asset allocation. Over to you, Mr. Haria.
But as Shruti was mentioning, it was a very interesting and interactive session last time around, where we basically discussed what are the different types of funds and how you should be handling your money. Taking that probably one step forward, the thing which probably impacts all of us is how should I create long-term wealth without being too worried about it, and also without day-to-day following what I need to do. So it's bad enough that you have a family to handle, you have a job to handle, you have so much OTT platforms to catch up on, which otherwise you'll miss out when you discuss with your friends. And on top of that, to understand what's happening in the economy, not just India, abroad, and then allocate in the right products seems a tall task. But from an investor perspective, we at ICICI Prudential have tried to make it easier by having a suite of asset allocation products, which will tend to solve most of your investment needs. So as was discussed last time around, there are multiple products within equity: large cap, mid cap, small cap. Then there are hybrid funds, which is aggressive, hybrid, balanced advantage fund category, multi-asset funds. Then there are gold mutual funds or gold ETFs and gold fund of funds. Soon we will be basically seeing even silver as an option in the financial investments. Then there are other traditional investment avenues. How should you approach it as an investor? The good part is that it is simple, it can be done easily, and of course, as I had mentioned last time, like we have a family doctor to go to for all our requirements as far as health is concerned, for our financial health, we do need someone who understands and can help. And it is worth the effort to have a good financial advisor in your life. Taking it one step forward, how do you basically create wealth? What is the right opportunity or right time for you to invest? First step, start investing early. Second step, save as much as you can. It is a difficult task these days because we are all in a world wherein we probably end up spending a lot more on gadgets, on holidays, materialistic things. And the savings rate in India is generally going down. Just to put it in perspective, the savings rate in India used to be 25%. So both China and India, by virtue of the cultures being what they were, we used to save 25% of our income. Now that has already come down to 15%. So that's a very big drop in our savings. So now our savings have dropped, and on those lower savings, with the price rises happening across all services and goods, you need to prepare not just for your immediate spending, like kids' education or marriage, etc. You also need to probably plan for a retirement. And unlike earlier years where people used to work till 58, 60, traditional standard jobs, the market environment is changing so much. I was just doing a video yesterday with on disruption, and one of the speakers mentioned that by 2030, the disruption in across sectors, the disruption which we are seeing across sectors, right, because of technological advances, etc., will probably make 30 crore jobs redundant in the normal day-to-day activity that we are doing. So across the world, if 30 crore people are not going to be in the same job, they need to refine their skills. And if you're not able to refine your skills, you'll probably work much lesser in terms of number of years. And hence, it is more important to save. So first part, saving. Second part, of course, is start investing early. And third part, and the most important part, where to invest. And that's where the entire asset allocation category becomes extremely important part of your allocation. You can start with it, you can end with it, you can continue with it. That's the beauty of asset allocation plans. It's not a tactical call, it's something which will stay with you forever. And why is that important? Think about it over the last 15, 18 years, right? Many of you would have seen the market cycles over 15 years. If you've not seen it, you would have seen it over the last 3 years at least. We saw markets doing very well in 2017-18. Then there was a correction in 18-19, all the way 20 March because of the pandemic. We saw a very sharp fall. And then again, markets have gone to all-time high right now. So these ups and downs in equity markets especially keep happening. And most of us human beings are not tuned emotionally to handle loss of money. So when we start losing money, it is almost impossible for us to allocate more money into the asset class where we are losing. Think about it. If you had invested in real estate and you lost money in real estate, did you ever buy a real estate property in the last 3-4 years if it has fallen? Or any asset class where you've seen a fall? Gold, classic example. Maybe 1 year back when gold went up from 36,000 in March 2020 to 56,000 in August 2020, there were more takers. We were also seeing that being reflected in mutual fund inflows. But today, if you ask me, last 1 year, gold has come down by maybe 10% or 12%. Very few of us are actually investing in gold because the past returns are something which influence our current decision making. It is this emotional greed and fear which you should try and avoid if you want to create long-term wealth. And the simple solution to it is whenever valuations are cheap, you buy more. Whenever valuations are expensive, you basically reduce equity, buy low, sell high. Very simple to hear, very simple to understand, but very difficult to execute. And it is at this juncture that I would like to introduce you to the Balanced Advantage Fund category. In my humble opinion, all of you should have your investments and not just small investments. I think 50% of your disposable which you have for more than 3 to 5 years, you should have it in the Balanced Advantage Fund category. And the reason is very simple. First, let me explain what this category does. And then I'll probably speak about why it fits well for your long-term wealth allocation goals. So, take the money which you invested and put it a higher amount to equities, right? That's what exactly you need to do. When something is available cheap, you allocate more towards it. But most of you will agree, we actually do the reverse. When the markets are doing well, more money you will put in equity, and when the markets fall, you tend to take out money from equities, right? And this is where the Balance Advantage Fund brings a very important aspect to your life.